Good morning and welcome to the Moneycontrol live stream. You are watching Markets with Santo and CJ. Well, we are all set to kick off this week with a boom with, it seems that globally risk appetite is back for investors, for equity markets. If you look at the Nifty futures on the Singapore exchange, they are indicating a more than 1% up move for our local stocks, largely on the back of a spectacular rally, basically, if you can call it that, on Friday on Wall Street. The S&P, Nasdaq and Dow Jones index, all three of them rose more than 2 to 3%, Santo. And it seems that economic data that came out in the US over Thursday and Friday has started building some confidence among investors that while inflation is the main fight for the US Federal Reserve, its action will probably not tip the world's largest economy into a recession. And I think that is providing a lot of relief to markets, not only in the US, but in Asia as well as India.
Well, CJ this morning seems to be in very high spirits. And,
it is, absolutely.
But CJ, I would just like to draw your attention to this one tweet, which influencer Kush Katakia had posted over the weekend. Okay. Because some people seem to think that there's no trouble just because it hasn't happened yet, right? If you jump out of the window at the 42nd floor and you're still doing fine as you pass the 27th floor, doesn't mean that you don't have a serious problem. Okay, this is from a Charlie Munger quote. So, I think something similar describes the mood in the market at this point.
Santo, I think this tweet would have made much more sense if the person would have tweeted out in February. But I think doing it at the end of May when much of the negativity has already been factored in, I think it's a bit too late in the game.
Okay, look at it this way, CJ. Now, there's been no visible improvement on the macro side so far. You still have fairly high crude oil prices, you have high inflation, so those things have not really gone away. Okay, and also add to that the Fed is likely to raise interest rate, also tighten on its the quantitative easing, which had been the case till some months back. Okay, and valuations, now you may say that there's been a huge correction and stock prices have come up sharply from that peak, but also view this side by side with the fact that most analysts are cutting the earnings estimates for majority of the companies, and then suddenly the picture doesn't look all that great.
Well, Santo, I think you're, of course, as true to your nature, you're being very cautious about it, but I think bulls are finally making a good comeback after being very lethargic over the past 2 to 3 weeks. Yes, Friday's up move that we saw in the market helped the index close above the 20-day moving average, right? And that was very critical because we have been lagging below that average for a long time, and now I feel that it is very clear that today's move will blow us past the 16,400 resistance level, and after that there is a good chance that we could see another 300 to 400 points in short covering rally. So for me, at this point of time, bulls are in charge. And you talk about economic data, you look at the the personal spending data that came out in the US. Despite the multi-decade high inflation that is in that economy, consumer spending still stood firm in April, in March, and that goes to show that the US economy is going quite strong despite concerns of a recession. And I think that strength is now giving confidence to the investors that probably maybe the US Federal Reserve chief is right, that maybe they can raise rates without tipping the economy into recession, and they can win this fight against inflation that they are probably seeing after many years.
Well, CJ, trust you to bring in all those fancy technical indicators to buttress your point.
It is what it is.
Also remember the fact that we have seen quite a few false dawns right from the start of 2022, and I think that's likely to be the trend going forward also. Well, you see false dawns, markets rallying briefly, and then a big fall.
I hope that this time it is not a false dawn but a proper sunrise for the market, for the bulls, and hopefully we will probably move to inch towards the record highs around the 18,400, 600 level.
You're very hopeful, and that's what I like about you, CJ.
Absolutely, you should always be optimistic in life. That's it. Let's quickly dive into some of the key stocks that have come up on our radars, starting out
with Mahindra and Mahindra. Great set of numbers for the fourth quarter. The company has managed to hold on to its margins as well. Now, in the auto space, this has been one clear outlier. I've been flagging it time and time again, and it's seen from the fact that the company has managed to improve its market share. Now, in terms of revenue market share, it's number 1 in the SUV segment. That has happened in the fourth quarter,
Yeah.
exactly. And in addition to that, the tractor numbers have also been quite good. The company has managed to improve its market share there also by 180 basis points there. And Morgan Stanley is of the view that given the turnaround in the SUV business and the cheap valuation multiples, plus there could be a surprise on the upside as far as the tractor numbers are concerned. So this stock makes for a great buy.
Definitely, auto is definitely a contra trade. It has become a contra trade the entirety of 2022. If you look at among the sectors who have been outperforming, automobiles are definitely at the top of that list, and M&M of course is out there. If you look, I mean, this is one stock that I have to agree with you. I cannot find chinks in the argument for M&M at this point of time. Things are looking up, but there is always a possibility, that probably 2 to 3 months down the line, how inflation shapes up, how farm income shapes up will be, and of course most importantly how monsoon shapes up will be very critical for tractor demand going ahead. We had seen a similar sort of rally in M&M back in 2020 from mid 2020 on to early parts of 2021, and then we saw a sharp correction because tractor sales slowed down as the rural economy slowed down. So the rural economy will remain the key, and it will be something that I am also quite optimistic about.
I'm glad that for a change, CJ and CJ is agreeing with me.
I have to be fair. You have to be fair where you have to be fair. Talking of another stock that I am optimistic about, and probably you will raise an eyebrow here is Nykaa. The company came out with a resilient set of numbers for the March quarter, despite the challenging macro environment that is currently operating in. The Q4 sales grew about 31% on a year-on-year basis, while the gross merchant value, which is a key metric for Nykaa, also rose upwards of 40%, Santo. And if you look at what most brokerages have said, that they have said that the performance is in line. Of course, there have been some operational challenges in the quarter. If you look at the advertisement spending, the dent on margins, but the longer term picture still remains quite true for Nykaa. It is a one of its kind business in the internet platform space. Its growth trajectory is very strong. Its market is expanding, and Edelweiss believes that this is a multi-decade growth opportunity, and therefore, given that its stock has already corrected 47% from its record highs and is about 20 odd percent from its IPO price, this is probably the best time investors are going to get to accumulate on this counter.
Well, this is an argument we keep having time and time again. CJ, don't look at something from the peak price. That peak itself may have been an anomaly.
Oh, come on. Every peak is an anomaly for you.
So, see, valuation still, if you look at the earnings, valuations still are pretty expensive, when you would compare it. More importantly, because given the overall market condition, also look at it. Average order value in the beauty segment is down by about 2% for the quarter, and for the year as a whole it's down by about 5%. Also incremental, the share from new set of customers, that's also come down from about 30% to about 27%. So all this shows clearly some kind of pressure, in the company's ability to scale up its revenue. Also remember, GMV, gross merchandise value, went up by about 45%, but you look at the growth in revenues, that's about 31%. Okay, and the company is spending heavily on marketing and promotions. All this put together, clearly you can see some kind of pressure on the bottom line going ahead, which makes the stock look very expensive, CJ.
Well, Santo, Nykaa, much like any other company out there, is also dealing with the the monster that is inflation at this point of time. Of course, in a high inflationary environment, customers are very unlikely to spend too much on beauty and personal care and other fashion, all those sort of products, right? These are all discretionary items, and consumers are very likely to cut down on them. But that is a very near-term headwind, right? That is, you can always argue that this could last for another 6 months, this could last for another 12 months, or it could be over by the end of this quarter itself, right? So I don't think that investors, when they're looking at Nykaa, would probably be too perturbed by the near-term uncertainty. It is not that the business model itself is under doubt, as sometimes you say is the concern with other startups that have been listed. But for Nykaa, its content-driven, inventory-driven model is unique, and therefore it also creates challenges for other people to come into the business, even if they have bag loads of capital on their back. it is a very difficult business to crack, and I think Nykaa therefore has a lot of USPs that other companies cannot compete with.
I don't argue on the model, on the business model of Nykaa. It's strong and it's hard for somebody else to crack. But my argument always is, how much are you willing to pay?
At this point of time, a lot.
JSW Steel, the company reported its fourth quarter numbers over the weekend. Now, EBITDA was in line or even slightly better than what most analysts were expecting, but the cost pressures are becoming very evident according to most analysts who are tracking the stock, and the cost of coking coal, which is one of the key raw materials, that's expected to remain elevated despite coming off its highs. That's a big negative for steel companies in general. Also, you've seen this big sell-off in steel companies following the export duty that was levied by the government just a couple of weeks back. So that's changed the overall sentiment for steel stocks in general. And what analysts are saying about JSW Steel is that it's going in for some intensive capacity expansion. Now, that's maybe a good thing from a longer term perspective, but in an environment where there is uncertainty about demand, steel demand, and also that steel prices have been coming off, I think this is clearly not good news. So most analysts have again downgraded their ratings on the stock.
Well, Santo, definitely the sentiment has turned around for steel stocks, and definitely not for the good. But I feel a mark of a good investor is to get through these tough periods if you believe in the longer term story. And if you look at the longer term story for steel stocks in general and JSW in particular, that remains quite steadfast even right now. We are still expecting that there will be a new capex cycle in the domestic economy. We are still expecting that China will come back, with all guns blazing after the COVID restrictions ease. So therefore, demand for me is not too much of a concern. You can also look, that is also probably reflected in the sort of capex plans that the company has announced after its Q4 earnings, and that should give investors some amount of confidence when it comes to demand, right? And when you talk about prices, well, of course, the key determinant now about domestic prices has become the curbs that have been imposed, or the export duty that has been imposed by the government. Now, JSW believes that this duty will be short-lived, and now this duty has been imposed largely because to contain inflation at home. If inflation does come under control with RBI's action probably in the next 3 to 4 months, then I believe that once these curbs are rolled back or reversed, there could be a sharp relief rally on a lot of those steel stocks, and JSW Steel would probably be at the top of the list for investors who are looking to accumulate for a longer term steel demand story that is emerging in this country.
But overall, I think, CJ, the sentiment for metal stocks in general is not what it was till about a month back.
I thought old school never went with the sentiment.
But this is cyclical. This is cyclical. CJ, metals are cyclical. You have to play the cycle, and the cycle appears to be over, which is what you are not getting.
Get on the bicycle and start pedaling, my friend. This is the time. This is the time for investors to start pedaling to reap the dividends later. That said, another stock that is showing good signs of demand as well as ambition is TCNS Clothing. The company came out with a decent set of Q4 numbers wherein it basically has recovered fully from the pandemic's impact. If you look at it, if you compare the Q4 sales for FY22 with Q4 sales of FY20, the growth is about 107%. But analysts say that the recovery has been slower than probably some of the peers out there, but that has not deterred the management. They have been very ambitious in declaring their targets for the coming years. They expect to open more than 100 stores, Santo, in FY23, which would be probably almost double of the 48 stores that they opened in FY22. If you look at what Edelweiss has to say about the valuation as well as the growth opportunity, they believe that the stock is very, very reasonably priced at this point of time. And given if the growth does come back for TCNS or apparel clothing companies out there, with probably the reopening of the economy, with offices now reopening again, then this could be a very, re-rating potential for the stock in the near term, and therefore price targets as well as earning estimates are likely to inch upwards in the coming quarters for the company.
Well, again, CJ, I think a case of reasonable valuation just because it has come off its peak. The company is yet to turn corner.
It's never really reached peak, in that sense, because these are all reopening themes in that sense.
And I think we just have about
a very strong start for the market.
For the market open, yes, it's opened already. 171 points, 77 points up now on the Nifty. Very strong market breadth. Close to 1900 stocks have gained, 281 stocks down. Nifty Bank among the big gainers, up
Yeah.
by close to 1%.
And small cap and mid caps are also doing quite well. Nifty small cap 100 index is up about 1.4%, whereas the Nifty mid cap 100 is about 1.1% higher at this point of time.
Strength in IT stocks as well. Infosys,
Definitely,
Wipro among the
yes.
big gainers in early trade. You're also seeing Tech Mahindra, which is up by about 1.3%.
Yeah, good start. If you look at the market trend, it's quite bullish. Santo, 1930 stocks have advanced on the NSE at this point of time, compared to only 281 declines. So very good breadth, good rally at this point of time. But the only hope will be that this sustains till the end of the day. We do not see selling pressure emerging probably after 2 o'clock, as has been the market's habit over the past 3 to 4 weeks now.
See, you've been talking about a bull run and yet you're not yourself
No,
convinced.
I am convinced. I'm just hoping that things stay the way they are, because these days you cannot be certain about anything. I mean, if you're certain about something, then you're definitely wrong about everything.
So, coming to TCNS Clothing, now look at the last 12 quarters earnings. Clearly there is no sign of, any visible improvement. It's been pretty much in the same band. So, you're looking
Well,
at
Santo-
pre-pandemic and now post-pandemic, the sales have almost remained the same.
Santo, 12 quarters includes the 2019 slowdown, the 2020 pandemic and 2021 pandemic. Of course, there has been no improvement. In fact, probably the company has done well to, in fact, hold on to the base that it had in 2019, given the treacherous journey that apparel clothing industry has gone through for the past 3 years.
So, the inventory days have also risen very sharply, and also the other parameter which I'm looking at is the cash conversion cycle. That has also gone up. So, when you put all these three things together, sales not really rising, inventory days increasing, cash conversion cycle also increasing, then it is, it's not a stock I would be comfortable with. Also remember, CJ, this stock has very low liquidity, which in this kind of a market can be really treacherous. Companies yet to make profits. So, my case is
Well,
very simple.
treacherous only if you're looking to sell, right? Not treacherous if you're looking to buy. And I feel that this is one stock that is going to see some buying emerge as we head forward into the coming months and quarters, as sales also will recover. And investors definitely see signs of that growth coming back, which the management is so confident it will.
And the last stock on our watch list, Tata Power. Now, CJ, till some months back, the whole power generation story was about higher demand. But I think now that is shifting. Government is trying to work out a package whereby, the distribution companies can repay the power generators over a period of time. And that's bad news for the power generating companies' cash flows. In addition, Tata Power's fourth quarter numbers were not all that great. They were decent. However, analysts have picked up quite a few holes in those numbers. They say that now valuations are pretty expensive at this point in time. Also, with clear shortage of coal at this point in time, I think you're likely to see more pressure on the bottom lines.
Well, Santo, cash flow, of course, would be a concern in terms of how the government plans for the state discoms to probably pay off their dues. But Moneycontrol also reported a very significant story last week, wherein it is probably the reporter had learned that government is willing to relook into the tariffs for a lot of the imported coal-based power plants, such as those in Mundra. Tata Power, of course, has a plant in Mundra which is based on imported coal, and if those tariffs are revised higher, that could be a big boost for the earnings of Tata Power, because let's not forget, a lot of these imported coal-based power plants have been shut down because they cannot afford to run anymore because of the high cost of coal. Now, government wants to get these power plants firing again because of the demand crisis that we have at this supply crisis that we have at this point of time. So for me, that could actually be a near-term trigger that could outweigh the possible negatives from the government's plan for repayment of the dues for Gencos. Apart from that, if you look at Tata Power story, it's not really about the past, it's about the future, right? And the present. The present and the future of the company lies in the renewable energy space, and there the company has been showing decent traction. While it recently operationalized a 100 megawatt plant in Maharashtra, it has also got into an agreement to start a 1000 megawatt plant with SGVN, a solar plant with SGVN in Rajasthan. So that goes to show that it is steadily building up its portfolio in the renewable energy space. Apart from that, if you look at the valuation as well, I don't think that the valuations are actually unreasonable. Given the more than 25% correction from the top for the stock, I feel that there is now reasonableness when you talk about valuation, and investors probably will now like to see more execution happening. The March quarter numbers were good, but they would like to see better numbers, and if those numbers are delivered, then these sort of valuations will definitely be a zone of accumulation on the stock.
Well, on that note, it's a wrap on this edition of Markets with Santo and CJ. Do share your feedback in the comment section below.
And do follow us on the social media links at the bottom of your screen. And for rest of your updates on the financial markets, stay tuned to moneycontrol.com and the Moneycontrol app. We will catch you live again at 3 p.m. with all the day's action. Till then, have a great trading session.